Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. As usual, we'll talk about the euro currency today, the 26th of August, and we'll start from the daily time frame. Well, today is the eve of Ben Bernanke's speech in the Jackson Hole that will start right from the 4 p.m. on the Central European time, and it will be very significant for our current market. And I think that those energy that market has built currently will be released and lead to some breakout. Well, I suspect that this breakout will be to the upside, although I do not see the clear signs that it really will happen in that direction. Well, I can say that it has to happen to the upside. But if Ben Bernanke will give some hints on the quantitative easing third stage of that program, this will be negative for the dollar, since the money supply of the United States dollar will not be backed by anything. This will be just a hidden issuance, hidden emission of the currency, and Federal Reserve will continue to buy the bonds. So it will look like the United States borrows from themselves, and that is a negative situation for the United States dollar. If Ben Bernanke will announce the starting of that program, this in medium-term perspective could lead to the weaker US dollar. Also, the much will depend from the value of this program. So currently the rumors said that this could be from 500 billions to the $2 trillion of dollars. So this is a bit wide range, but if Ben Bernanke will announce some value that will exceed the 500 billions, this will be even more negative. So keep an eye on the Ben Bernanke's speech in the Jackson Hole today. Again, I said that it will start on the 4 p.m. on the Central European time. Well, it's about 10 a.m. on the Chicago time. So it will be very important. And currently you have to decide by yourself, will you possess yourself for that possible doom and gloom on the Forex market, or it's better to sit on the hands and to watch for some when the market will choose some direction and then enter on the retracement. This is the part of your trading style and your trading approach to the market. But in general, let's in current research, let's find out what some signs, maybe some clues, what to expect on the market and what could happen during today's trading session. Well, on the daily time frame, we see that market really shows the very tight range and very choppy price action inside this range. So it's a lot of inside trading sessions. It's in general very tight range for the Forex market and for the euro currency. Although market stands now above the weekly pivot point, but you can see that yesterday it has closed below it. So that is just a fluctuation around some medium area of that weekly pivot point and the medium 50% of that strong upward bar. So as we said previously, market stands inside the range of that bar for 2 weeks. That is the market indecision, and that is the environment that we could treat as the building and energy, as we said. In general, if we will take a look at that pattern, what do we see? Market struggle with that 145 area. Hit, pull back, hit, pull back, hit, pull back. But you can see that at the same time market is forming high lows. High low, high low, high low. Generally you can see that trend line. So that is in general bullish environment. And very often this kind of price action leads to the breakout of that highs, even at least for the grabbing the stops. Maybe this will be the follow breakout, but very probable that it will happen. Maybe market will just wash and rinse of that highs and then returns back and accelerates to the downside. It also could happen. But this breakout will stand. Unfortunately, we can't say will be the truth breakout or not. Based on the fundamental look, this could be the truth breakout in the medium term. But in the short term, some participants could start to close their positions. That could lead to some reversal and really doom and gloom and very high volatility on the market. But this breakout really could happen. The second environment, bullish environment that could happen, is the stop grabber. You can see that MACD predictor comes very close to the current trading session. So if market will show some very small moving below that red line and then returns back, this could lead to some pattern that assumes or taken out of that highs. Okay, that could point on the potential splash on the market on the Monday, for instance. Or this could even today, if market really accelerates to the upside. Well, daily chart in general shows the upward triangle. It's also our head and shoulders pattern that's part of that triangle that we have discussed previously. So in general, this is the bearish, this is a bullish picture, because highs and the struggling with that 145 area looks like the preparing to the breakout. What kind of breakout it will be, true or false, it's very difficult to say currently. Well, on the 4-hour time frame, what do we see? The market has hit our area that we have discussed yesterday. It has reached the 100% from that ABC pattern, A, B, C top, 100%, 143.51, and 618 from that pattern, A, B, C top, 143.37. Also, this is the 127 extension from that retracement to the upside. Okay, you could treat it as butterfly buy, but for me it's not very pretty butterfly. It's better treated as just a 127 extension of that retracement to the upside. Okay, we said that probably market could show some wash and rinse of that low, so that has happened. The market now returns back. The 4-hour trend is still bearish. Well, this environment and this pullback from that area could lead to the greater butterfly, to that butterfly. This is the left wing of that butterfly. Okay, and this could be the right wing. Yesterday we said that for this butterfly is better when the market will show some retracement at least to the 618 support from that low to that high. So that has happened. Market has hit that area, and that is very typical ratio for the butterflies: 618 support or 786 somewhere below that low. But 618 is also acceptable. So this could be the greater butterfly. That is potential currently bullish pattern that could lead the takeout of that highs and acceleration further to the upside. Okay. Well, and for us, this thrusting to the upside will be the major thrust, major move, and that we should focus on during today's trading session, because it will let us to place tight stop if you would like to take participation in the potential doom and gloom during the Bernanke's speech. Okay, and if you will be right, this could lead to really amazing risk-reward ratio. This could be big money, really. On the hourly time frame, what we see from that thrust? First of all, you can see that market has hit 618 target from that A, B, C bottom pattern. It's not very significant, and it's not very big deal for our forecast today. It just shows some resistance that market has touched. This is also the 618 resistance from that swing down. You can see some kind of an agreement that could lead to some retracement to the downside. Two areas to watch for to enter long, if you really want to take that risk, is the nearest FIB support 143.96 and the Conklin support around weekly pivot point. That is my preferable area, because you can see market hit it, show some retracement, break it to the upside, so we could retest it from that another point. Also, you can see that it's long-term area of support resistance. So market hit it, pull back, hit it, pull back, breakout, hit it, pull back. So this is the significant area, classical support resistance area. Also, this is the FIB conference support on the hourly time frame. So that is the preferable area to enter and to watch for the buy signals on the 5-minute chart, for instance. Well, there are two levels where you can place the stop. The first level is right here, 143.57, the 618 support from that swing. So if market will negate that move to the upside, this will be not very good for the potential move to the upside, because market could show, for instance, deeper move on the 4-hour time frame. It could be just move a bit lower, but this move will not cancel the butterfly. So decide by yourself. You could place stop below that low. On the hourly time frame is that low, 143.22, or to place stop below this 618 support. But probably if market will negate that swing and move below the 618, it will take out that low. This probably could lead to deeper move to the downside. So from the savings of your money standpoint, it's better to place stop, I suppose, somewhere in that area. Well, because moving below that low on the 4-hour time frame will not destroy, it will not erase this butterfly, because it just could show deeper move that is acceptable also for the butterflies, and the reverse from the lower level to the upside. From that standpoint, placing stop just below this low, it's not very logical. It will lead to the more losings from your position. That's why probably it's better to place stop here. From the another point of view, if really huge volatility will start on the market during Ben Bernanke's speech, this stop could be triggered very fast and easy. That is major risk of the current situation when there happens any speech of any authority of the central bank. Well, that choice is up to you to take this risk or not. Even if you will be right and the volatility will increase, you could be just stopped out. And market then could return and continue move to the upside. But in general, this swing is our swing to focus on, and this could let you to possess yourself for the further move to the upside based on the butterfly, because on the fundamental standpoint, the announcement of the third stage of the quantitative easing program is a negative for the dollar. Also, we have some potential bullish patterns on the weekly and monthly time frames, and this really could lead to the breakout of the 145 area. The major question is, will you be alive during this doom and gloom or not? Will your stop be triggered or not? From that standpoint, control your risk. Maybe it's better to place farther stop, but reduce the trading volume, because if the market really accelerates to the upside, it will give you anyway sufficient profit. So choice is up to you. I just want to show you two levels to watch for, where you can place the stop and where you can try to enter long. I suppose that area around 143.80 is a nice area to watch for the enter on the long side of the market. Okay. Whether place to stop, that is your question. Control your risk according to your trading style, what particular patterns you trade, what your money management system. I don't know. It's very personal. So, but be careful today. Again, maybe you will try to enter with the lower volume position, smaller position, and place a bit farther stop. It's a better choice to do during the trading session.